For nearly a century, Boeing was more than a company. It was a symbol of American engineering, of precision, of trust. When a Boeing aircraft lifted off the ground, passengers didn't think about corporate decisions, or boardroom politics, or quarterly earnings. They thought about arriving safely. Because Boeing had earned that trust, but today that trust is fractured. Not because of one accident, not because of one bad year, but because of a long chain of decisions that quietly transformed Boeing from an engineering-led company into a profit-driven machine. This is not just the story of a plane. This is the story of how corporate pressure, unchecked power, and financial incentives can bend even the most respected institutions until they break. This is the story of Boeing, and how one of the safest names in aviation became one of the most controversial. To understand what went wrong, we have to go back to a moment of fear. In the early 2000s, Boeing faced a threat it hadn't seen in decades. Airbus, the European manufacturer, was gaining ground. Its new aircraft promised better fuel efficiency, lower operating costs, and airlines were listening. Orders began shifting. Market share was slipping, and for the first time in a long time, Boeing was on the defensive. The traditional Boeing response would have been simple. Design a new plane from the ground up. Take the time, spend the money, do it right. But time was the one thing executives felt they didn't have. Developing a new aircraft would take nearly a decade and cost tens of billions of dollars. Airbus was already ahead, so Boeing chose a different path. A faster path, a cheaper path, a riskier path. Instead of building something new, they decided to modify something old. An aircraft first designed in the 1960s, the 737. The idea was elegant on paper. Keep the same plane, avoid expensive pilot retraining, speed through certification, and beat Airbus to the market. That decision would change everything. The result was the Boeing 737 MAX. To the outside world, it looked almost identical to previous models. Same shape, same cockpit, same promise. But under the surface, the aircraft had fundamentally changed. Larger engines were added, mounted higher and further forward, changing how the plane behaved in the air. These changes created a problem. Under certain conditions, the nose of the aircraft could pitch upward dangerously. Instead of redesigning the airframe, Boeing chose a software solution, a system called MCAS. Its job was simple: automatically push the nose of the plane down if it detected a potential stall. The problem? Many pilots were never fully informed that MCAS even existed. It wasn't emphasized in training, it wasn't clearly explained in manuals, and it relied on data from a single sensor. One sensor, one point of failure. At the same time, internal warnings began to surface. Engineers raised concerns. Test pilots expressed discomfort. Emails revealed anxiety about safety margins. But those warnings collided with deadlines. Airlines were waiting, investors were watching, and Wall Street expected results. Every delay meant lost orders. Every redesign meant lost profits. So, compromises were made. Then the unthinkable happened. On October 29, 2018, Lion Air Flight 610 crashed into the Java Sea. 189 people were killed. Initial explanations pointed to pilot error, a tragic accident, an isolated incident. But behind the scenes, questions were already forming. Less than 5 months later, on March 10, 2019, Ethiopian Airlines Flight 302 crashed shortly after takeoff. 157 lives lost. Same aircraft, similar behavior, same terrifying pattern. The world stopped. Airlines grounded fleets. Countries banned the 737 MAX from their airspace. And for the first time in aviation history, the United States was one of the last to act. The truth could no longer be contained. Investigations uncovered a disturbing reality. MCAS had activated repeatedly. Pilots fought the system, but they were never told how powerful it was. Internal documents revealed that Boeing had downplayed the system's significance to avoid additional training requirements. Regulators had trusted Boeing. Boeing had trusted itself. And the system trusted that nothing would go wrong, but it did. The consequences were catastrophic. All 737 MAX aircraft were grounded worldwide. Boeing halted production, its stock price collapsed, and the company faced billions in losses. But money was only part of the damage. Families demanded answers, governments launched investigations, and Boeing's reputation, built over generations, was torn apart in a matter of months. Executives testified before Congress, emails were made public, and the culture inside Boeing came under scrutiny. A pattern emerged: decisions driven by schedule, pressure from shareholders, a focus on financial performance over engineering judgment. This wasn't just about one plane, it was about a transformation inside the company. Years earlier, Boeing had merged with McDonnell Douglas. Leadership priorities shifted, cost-cutting became central, and engineers gradually lost influence to executives with financial backgrounds. Safety didn't disappear, but it became negotiable. After the grounding, Boeing promised reform. MCAS was redesigned, training was updated, and regulators eventually cleared the 737 MAX to fly again. But the story didn't end there. New quality issues began to surface: loose bolts, missing inspections, manufacturing defects. In 2024, a door plug blew out mid-flight on a Boeing aircraft, raising fresh concerns about production quality. Once again, headlines returned. Confidence wavered, and questions resurfaced. Had Boeing truly changed, or was the system still broken? What makes Boeing's story so unsettling is that it doesn't rely on villains. There were no cartoon villains, no single evil mastermind. Just a series of rational decisions made under pressure. Decisions that made sense in isolation, but were disastrous together. This is how institutions fail. Not with explosions, but with compromises. Not overnight, but slowly. Boeing didn't lose its way in one moment. It drifted. One meeting at a time, one ignored warning at a time, one deadline at a time. And that is why this story matters. Because Boeing is not unique, it's a case study. A warning about what happens when corporations become too large to pause, when regulators rely too heavily on trust, and when financial incentives overpower human judgment. This isn't just about airplanes, it's about power, about accountability, about systems that reward speed over safety. Boeing's future is still unfolding, but its lesson is already written. When profit becomes the destination and safety becomes a checkbox, the consequences don't stay in spreadsheets. They fall from the sky. This is behind the billions, and this is what happens when corporate power goes unchecked.